Let me ask you something real, something that goes deeper than strategy charts or setups. Why do you want to trade? Is it for the money, the freedom, the thrill? Do you want to prove something to others, or maybe just to yourself? Is it because you're tired of working a job that makes you feel dead inside? Or because you saw someone on Instagram flip $500 into a Lambo and thought, why not me? Here's the raw truth most won't tell you. Trading doesn't care about your dreams. It only cares about your discipline. Because trading, real trading, is not about sitting on a beach while your money works for you. It's not a 6-button hack to passive income, but it's a war. And not just any war, a war inside your own head. Here's where it gets interesting, because the problem isn't just technical, it's biological. You are literally not wired to be a good trader. Let me explain. When you win a trade, your brain releases dopamine, the same chemical hit you get from gambling, sugar, drugs, or social media likes. And just like with those addictions, your brain starts to chase that high. You think you're being rational, you tell yourself, I'm sticking to the plan, but subconsciously you're chasing a feeling. That's dangerous. Because feelings don't care about probabilities, stop losses, or market structure. What does this lead to? Revenge trading, over-leveraging, ignoring your system, the just one more trade mentality, holding losers too long, cutting winners too short. In other words, emotional sabotage. And here's the worst part. You feel ashamed, but then you try to fix it by trading again. And the cycle continues, like a hamster wheel of regret and hope. And the only antidote to that is awareness and structure. Because you're not trading a system, you're chasing a chemical. And nowhere is this more dangerous than when traders start over-leveraging. Let's break that down. Over-leveraging is when you use borrowed capital or leverage to control a position that's far bigger than your actual account size. Now, on paper, this sounds exciting, right? A small move in the market could mean massive profits. But here's the reality. It also means massive losses. For example, if you have just $1,000 and you're using 10 times leverage, you're now trading $10,000 worth of positions. If the market moves 1% in your favor, great, you just made 10% on your capital. But if it moves just 1% against you, you've lost 10%. And if it drops 10%, you're not just out of the game, you may owe money. Over-leveraging isn't just a technical error, it's a psychological one. It usually comes from greed, impatience, or a desperate desire to catch up. And it often ends with traders blowing their accounts, feeling humiliated, and giving up entirely. Discipline means not using all the tools just because they're available. Smart traders treat leverage like nitroglycerin, powerful but dangerous if mishandled. The most experienced traders often use low or no leverage because they understand that survival is the name of the game. So, if you want to stay in the game, stay sane and actually grow over time. Respect your capital. Don't over-leverage. Build slow, steady, and smart. This is the most honest guide to day trading psychology, not watered down, not sugar-coated, and no nonsense. Just the mental truths that determine whether you thrive or self-destruct. You've seen the videos, the penthouse views, the laptops on beaches, the 21-year-old who claims he made $20,000 in a single trade, and now mentors 6-figure traders from his phone. What you're seeing is a fantasy machine. Because what they don't show you is this: the trader who started with $10,000 and lost it all in 3 weeks, the person who maxed out their credit card to buy the dip and never recovered, the obsessive anxiety that builds from staring at charts for 14 hours a day, the spouse who left because trading replaced them. For every loud, overconfident success story online, there are hundreds of burnout stories no one ever tells, not because they didn't try, but because they never understood the mental war they were entering. Day trading is not glamorous, it's not easy, and it's not forgiving. It demands a level of emotional awareness and discipline that most people never develop, which is why most people fail. It means understanding your emotional triggers before they happen. It means building a routine that protects your decision-making from the chaos of the market. It means using structure as armor, because the markets don't care if you feel confident. They don't care if you're tired, emotional, or just have a hunch. A structured trader doesn't ask, how do I feel today? They ask, what does my system say? They don't chase price. They wait. They don't trade when emotional. They journal. They don't seek revenge. They take a walk. Discipline beats dopamine. every single time. Let's take a moment to study someone who embodies this. Hicham Benjelloun, a professional trader known not just for his technical skills but for his mental edge. He once said, "Trading is not a business of being right. It's a business of managing wrong." Your job is not to predict the future. It's to survive long enough to benefit from probability. He treats trading like a performance art, not entertainment, but discipline in motion. His edge comes not from knowing more than others, but from reacting less than others. He doesn't fear missing out. He fears overconfidence. He's not emotionally attached to being right. He's obsessed with staying consistent. You don't have to copy his strategy, but if you can copy his mindset, you're already ahead of 90% of traders out there. So now the big question, how do you build psychological strength as a trader? For real. Here's what actually works. Not fluff, not theory, real actionable tools. Create a pre-trade routine. Just like athletes warm up before a game, you need to get your mind in the zone. Review your trading plan. Visualize different market scenarios. Ask, what would make me overtrade today? Prepare for it. Journal everything, not just wins and losses. Why did you take the trade? What were you feeling before, during, and after? Self-awareness starts with brutal self-honesty. Use hard rules, not suggestions. If I lose 2 trades in a row, I stop. No trades before 10 a.m. Max 3 trades per day, and you actually follow them, especially when you don't want to. Some of your best trading decisions will happen when you're not trading. Walk, breathe, reset, the market will still be there. Take a break. Track performance by behavior, not just profit and loss. Did I follow my rules today? Did I trade impulsively? Did I overtrade out of boredom? Did I stick to my plan? Long-term success is about consistency and behavior, not just outcome. So here's the hardest truth to swallow. You will make mistakes. You will break your rules. You will lose. You will feel like quitting. That's not failure. That's the process. Embrace it. The traders who survive and thrive are the ones who learn faster than their emotional breakdowns. They don't beat themselves up. They study themselves. They don't seek perfection. They seek progress. And over time, that emotional edge becomes unshakable. This resilience is what sets them apart in the trading world. Everyone's hunting for the perfect strategy, but the longer you're in this game, the more you realize your real edge is your mind. Master it, and you master the market. Because you can copy someone's strategy, you can buy someone's course, you can follow their alerts, but you can't buy self-awareness. You can't download discipline. You can't fake mental strength under pressure. That is the real game. True mastery comes from within. And if you can master that, everything else gets easier. Not overnight, but eventually. Because at the end of the day, this game doesn't reward the smartest. It rewards the most emotionally consistent, and now you know what it takes. And subscribe for more trading economic deep dives. Stay disciplined and keep learning.